What if I told you mortgage insurance is not the evil cost it's made out to be? It's actually your best friend. It's your ticket to the big show. It's in the trenches with you. Dare I say it's the best thing that's ever happened to you? Hey everyone, in today's episode, we're diving into the topic that's been the subject of much debate in the home buying world for literally decades. Mortgage insurance. Is it the unsung hero of the American dream or just another expense we want to avoid? Let's talk a little bit about the different layers and understand why mortgage insurance might just be the underrated tool that's been helping countless Americans step into their homes. Stay with me because we're going to get right into it. What exactly is mortgage insurance? For those not in the know, it's a policy that protects lenders from the risk of default and foreclosure. Simply put, it's a safety net for banks. It's also a trampoline for potential home buyers, providing that extra bounce towards property ownership. The fact is, many do not have the money to put down and enough money to put down to avoid mortgage insurance. In other words, you have to have 20%. A common topic is how the rich are getting richer. Can you imagine if we did not have MI to help those that do not have 20%, how much the numbers would be even more skewed? What about the families that it helps get them out of an apartment and into a home? It's helped provide stability for so many. It's helped provide a place for your children to grow up. It's a place where you can develop memories, cherishable memories. It's really been a phenomenal tool for so many homeowners. Most homeowners groan at the thought of mortgage insurance, believing it to be an unnecessary expense. But there's another side to it, so let's flip it. The long held belief that you need 20% down payment to buy a home has been a gatekeeper for many. But here's the kicker: mortgage insurance allows you to bypass this barrier. Yes, it's an additional cost, but it's enabling home buyers to control a large asset with minimal money down. This means you're not just waiting on the sidelines, saving up for that hefty down payment. Instead, you're in the game, benefiting from the appreciation of the entire value of your home, not just the slice that you paid for. In other words, you're benefiting from the entire purchase price, not just that down payment. All right, let's talk some numbers. Over the past few years, we've seen a surge in the use of mortgage insurance. Why? Because it works. For some, it's the difference between renting and owning, between waiting or living. If you had bought in 2019 using mortgage insurance because you only put 10% down, your annual rate of return on your asset, not just the down payment, but the total purchase price, is just under 8%. That's the beauty. You're gaining on 317 versus $31,700. And that was the median home price in 2019 was 317,000. The median home price today is 431,000. Sure, mortgage insurance is expensive, but when you weigh it against the benefit of home appreciation and the joy of home ownership, it's clear for many the scales tip in favor of the cost. Again, think about what it has provided. If you're currently renting, you have an opportunity to build wealth, of course, through appreciation, but also wealth with your family, having that time to build memories. Carry your bride over the threshold when you buy that house, opening up Christmas presents or whatever holiday that you cherish on a regular basis. Every single year, you get to do that in your house. In addition, you're not worrying about rental payments going up on an annual basis. You are now at a fixed asset, a fixed expense on your housing. And as Dave Ramsey would say, that's going to be your largest line item on your expenses, is going to be your housing. Speaking of Dave Ramsey, he's respected amongst the majority, right? Whether you believe him or not, everybody respects him. He's an advocate for saving 20% down to avoid mortgage insurance. It's super sound advice, I'm not going to lie. But it's not a one size fits all solution. I would venture to say that most of us that are watching this that own a home, you probably took advantage of MI, and I'm willing to bet it's one of the best decisions you've ever made. In a market where home values rise, waiting to save 20% could mean you missing out on a significant amount of appreciation. You need to be you need to be invested. Look at the stock market over the past few weeks. The Fed has essentially pivoted without saying they are pivoting. The stock market is calling their bluff as they do not believe they will raise rates again, and the market is headed up. If you're sitting in cash over the past week, you've missed a big run on the indices. If you're not in, you're out. It's pretty simple. Over the last decades, for the beginning of time, anytime there's been a beginning bull run. I'm not saying that we're in a bull run right now in the stock markets. I am not a financial advisor. My point is when there's a bull run, typically we see the most appreciation, the most gain in the beginning portion of it. And if you're sitting on the sidelines, you've missed it. Well, the same holds true in housing. If you're sitting on the sidelines, the chances are you're not going to get any appreciation, right? If you're not in, you're out. The question isn't just about spending or saving, it's about timing, opportunity, and personal circumstances. I can tell you from my personal experiences, and I can tell you from a borrower that we literally spoke to today, and she was upset about why she didn't pull the trigger in January when interest rates were at 5%. She wanted to wait until rates came down. Now she's buying at a higher price and a higher interest rate. Timing's tough. Typically, those that try to time it end up missing it. I'm not telling you to jump in and buy the first thing that pops up on that distribution list that you're getting from your agent that you've been speaking with, but I am telling you that you need to be ready. And patience and strategy will be the key in this market. But again, you need to be ready to jump on that opportunity, and they're going to be out there. So you need to be prepared. If you're finding value in this content and want to navigate the world of home buying with confidence, make sure you hit the subscribe button. Your support helps me. If you're finding value in this content and want to navigate the world of home buying with confidence, make sure you hit the subscribe button. Your support helps. To wrap this up, mortgage insurance shouldn't be brushed off as just another expense. Again, for many, it's the key that has unlocked the door to homeownership and the wealth building opportunities that come with it. It's important to evaluate your individual situation and make an informed decision that aligns with your financial goals. It may not be the right time for you, but I encourage you to prepare and look at all your options. My team and I are happy to help. If you need a referral, I'm happy to set you up with a loan officer, somebody that I know, like, and trust. Happy to do so. Comment below and I'll put you in touch with a loan officer and then a realtor if you need one of those. But the key is to get pre-approved first. Remember, the right time to buy a home is when you're ready, both financially and personally. Mortgage insurance can be a valuable tool in that journey. Weigh the costs, consider the benefits, and choose the path that serves your future best. Thank you for joining me today. And if you have stories or questions about your home buying experience, drop them in the comments below. Until next time, I wish you all the best. Have a fantastic week, and we'll talk with you later this week. Have a great day. Take care.